Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Great to have your company this Thursday afternoon on a positive day on the market after a couple of sessions of choppy losses. We're up by about 0.5% as we head in to match off on the CBO 200, while the ASX 200 is tracking a similar gain. In fact, not quite as strong as we head into the close, now up just about 0.25%. But we did have a very solid start to the day's trade after US markets rebounded from the previous day's sell-off, and the ADP employment report really fueling some optimism there as well. Let's get to the themes of the day here locally, and of course the bouncing back momentum really on the overall market, led a lot by these materials players. You've got the materials sector up by about 1.5%, energy looking good, healthcare looking good as well. There was a bit of a switch out of the banks, we'll get to that in a moment, and IT down by about 0.1%, but overall that big rebound coming through from the materials sector was very significant, particularly as you're continuing to see this iron slump as well in iron ore, down for a sixth session. And in fact, that is one of the longest losing streaks that we've seen in the commodity for some time. Iron ore down for a sixth session, its longest run of daily losses since August, and this is as we head into the low season for China's steel industry. And there's a little bit about optimism about the US and China trade truce fading somewhat after, of course, we had that meeting between Presidents Trump and Xi last week. And a hearty fall for James Hardie, falling quite substantially as it came out of a trading halt today. It's was down, I should say, by 1 point as much as 17%. Then it went into a trading halt. Now, James Hardie has said to the market that it believes that it may have been a result of a Bloomberg report on the plan to remove it from the MSCI Australia Index. But also we heard from one of its peers, Trex, reporting a bearish outlook on demand and flagging higher costs. So that is one of its US building material peers. Let's have a look at some of the sectors, though, more locally, and have a look at what we saw with, what have we got there? That's just what we saw in terms of some of the corporate stories, in fact. So NAB there down by about 2.8%. Earnings for the year were a little bit flat there, or cash profit came in pretty flat. But of course, it was really all about the fact that it flagged this higher hit to bad debts, $833 million, up more than 14% from last year. The full total dividends came in at $1.70 per share. That was up from $1.69 a year ago. NAB shares finishing lower by around 3%. Light and Wonder there as well. It had a good session. It did increase its adjusted net profit after tax by 25% for the September quarter. Amcor elsewhere also looking pretty solid. It increased its September quarter dividend as well. That was a stock that I had a great chat to with Marcus Bogdan from Blackmore Capital. You can find that on the website. Vicinity Centres also in focus, saying the outlook for the retail sector in Australia is increasingly positive. And then, of course, we talked about James Hardie there falling, closing down by about 13.3%. A little bit of C-suite news as well. We've got a new CEO at IGO, shares down 1.5%. And NIB saying Donald O'Dwyer will retire as a non-executive director. All right, now we might get to the sectors. There we go. Gold looking pretty positive today. Northern Star up by about 3.5%. Evolution, Newmont, Ramelius all looking good as well. Let's have a look at how the miners fared today. BHP, Rio, Fortescue all looking good despite that fall coming through in iron ore prices. And of course, the banks there, NAB was the underperformer. Westpac also under pressure, down 1.6%. Let's welcome to the COB Jimmy Jang from GBA Capital, who joins me now. Jimmy, great to see you. What was sort of the highlight for you in your words of today's session?
Oh, Juliette, you basically much covered very well today. With the gold price obviously bouncing back overnight, that really reignited that interest in the miners and the resource stocks, which obviously is something that we've been suffering a little bit for the past few days. But it's good to see that momentum coming back. And obviously, the sentiment has also improved globally, with the US markets also recovering from the brief tech sector pullback as well that we saw earlier the week. So I think it's a mixture of a stronger commodity sentiment and obviously a bit of a bargain hunting for those investors with a good cash position after those recent weakness that we saw. Look, Northern Star and Newmont was the top owners today. These are the stocks that we had in our portfolio for a while now. And gold is something that we were actually topping a lot more ever since we saw the price pullback over the last few days. So I think the momentum in this is only going to get stronger now with obviously the potential rate cut that the market's pricing in towards December in the US as well. Really good day for the gold miners, and also most importantly we saw the miners sector in general just recovering.
What did you make of James Hardie's fall? Do you think that was, as it kind of alluded to, the fact that it's going to be taken out of the Australia index, or is it that flag from Trex? What's behind all of these jitters?
Yeah, Julie, you kind of touched that point really well. I think, in my opinion, it definitely is that sentiment around the James Hardie being removed from the MSCI's Australian index. The market always moved a lot more faster than the report. So even if that wasn't the case, James Hardie has been going through that price pressure for a long time. With that kind of small kind of sharpening sentiment coming into the market, it definitely will trigger a lot more sell-off. Most on top of that, it felt even after that, like you mentioned, USP Trex gave that downbeat on outlook for their demand as well. So it's looking really, really shaky for the company. So definitely some pull up their socks and give some good news for the company, for the investors to regain their confidence.
Pull up their socks indeed. What about the banks? Does NAB need to pull up its socks? I mean, there's 14% higher bad debt charge that it had over the past year.
Yeah, look, the banks are very interesting because, especially like you mentioned, Julia, NAB did kind of, give that report out. And, it's not something that we want to see, especially with the RBA holding the rate as well. So, that kind of debt level is only going to get, worse, here onwards. And, we're also seeing potential the real estate market improving over the next, let's say early next year. So, with that kind of, outlook, we definitely need to be in a lot more better position. Or I think the investors were at least hoping that the banks would be in a lot more better position than that. The banks are, already overvalued. So even these type of, small news flow will definitely, trigger for a lot of these investors that had a really good profit with the banks. Definitely, it's not something that I'll be touching right now, especially in the financial sector. It might be something that might be coming soon, very soon, maybe early next week, next year. But not something that I would like to actively recommend at the moment.
All right, well, let's look ahead. We've got Moderna, Airbnb, Block all coming through with earnings tomorrow, or tonight, I should say. And then we've got looking at REA, News Corp. What are you seeing in terms of the overall sentiment with a lot of these US earning updates?
Yeah, look, I think from my end, we're actually kind of taking a lot of profits off the table and just kind of waiting for the market to kind of cool down. It's been too volatile, and we've seen that very evidently over the last couple of days with the miners pulling back significantly, especially in that small cap space. So within a small cap space, it's definitely probably a good time to populate your portfolio to make sure that we're not going to be suffering from that potential pullback we might see over the next couple of days, couple of weeks, with those reports coming out in the US. One company that I think you also mentioned, Juliet, is that we were really pretty happy with was Light and Wonder. They obviously reported that 70%, I think it was close to 80% jump in their quarterly net income, and that was roughly about $114 million. And the large driver of that was the iGaming revenue, obviously showing that good growth in that digital gaming as well. So yeah, look, I'm pretty confident that that the reports that we might see in the coming weeks will be good, but it again will create some more volatility. So not something that we'll be into topping up right now. Actually, it's a good time to take some profit off the table.
Yeah, and volatility is our friend as well. We need to remember too. Jimmy, thank you. As always, Jimmy Jang from GBA Capital. Getting back to stock specifics, it was a US special on the call today. The stock of the day was AMD, Advanced Micro Devices, which is listed on the NASDAQ. Lachlan Hughes from Swell Asset Management and Mark Gardner from MPC Markets joined Andrew.
When I look at the valuation, I kind of struggle with this one a little bit. If you compare it to NVIDIA trades on a 40 times earnings. This one's trading on, AMD's trading on 60 times earnings. NVIDIA has 125% return on its invested capital. AMD has a 5% return on invested capital. NVIDIA's operating margin is near 60%. AMD's is 10%. So look, I see that it's benefiting from AI as the data center market is projected to grow significantly. But just based on the valuation, I just couldn't commit money to this one over Nvidia.
It's far too big a risk here at these prices. I mean, you've had I think 56% jump since October the 1st on OpenAI deal, which everyone is starting to get a little bit sceptical about. And while the earnings were pretty good, I mean, it's really only justified. I mean, that price action sort of saying, well, you know, all the good news was basically was priced in. So they do have a good product range. They will be a long-term buy, but just not at that, like this value. This is eye-watering valuations. I mean, we were very happy with a quick win on our Global Alpha recommendation service, but you know, had it have been anywhere near these valuations, we wouldn't have recommended it in the first place.
Let's have a look at some of the leaders which helped us have a positive session today. We touched on Light and Wonder after its numbers coming through for the quarter looking pretty solid, up 8%. Worth noting, of course, it's going to delist from the Nasdaq. Ramelius had a good session. That was really on the back of that momentum you saw in gold. You can see that reflected in Bellevue as well. And Amcor, of course, a good session on its update as well. To the downside today, some of these stocks came under pressure. We touched there on James Hardie, attributing here James Hardie itself the fact that it's being removed from the MSCI Australia Index. Neuren also falling. Now, its third quarter sales of its drug to treat Rett syndrome rose 11%, which was less than what the market was looking for. Having a look at the small end of town, Fluence had a good session, up by some 19%. Gold stocks also looking solid there. Challenger up by almost 14%. And to the downside today, these stocks did not perform that well. Elsight off by about 11%. Government shutdown continuing in the US, a record now, the longest government shutdown in history. We're also going to have the Bank of England rate decision. It's expected to hold at 4%, while we'll hear from some of the Fed members, including Barr, Williams and Hammack, who are all speaking tonight. Tomorrow we get earnings, well, of course, on Wall Street overnight from News Corp and REA, but they'll be reflected on our market given that they are dual listed, and also AGMs coming through from the likes of Qantas, Amcor, which had its update today, and Nine Entertainment. That does it though for today. Let's have a quick look at how we finished out. Up 0.5% there on the CBO 200. Not quite, I don't think, as positive a finish on the ASX 200. It rose by 1/3 of 1% or 26 points, 8,827 points. And that comes after yesterday, of course, it hit that 20-day low. But really, it was all thanks to those gold players, the miners, energy stocks, and also healthcare. Had a bit of a switch out of the banks, as we mentioned, also tech and consumer discretionary stocks. Okay, we will see you bright and early for the final day of the trading week tomorrow from 9:45 a.m. Eastern. We'll see you then.